Washington. The federal government's gross national debt has surpassed $34 trillion. This record heralds political and economic challenges to improving America's bottom line in the coming years. The U.S. Treasury Department on Tuesday released report chronicling U.S. finances, which have become a source tension in politically divided Washington and could lead to shutdown of parts the government without an annual budget. Republican lawmakers and White House agreed last June to temporarily lift the nation's debt limit, eliminating risk of a historic default. This agreement runs until January 2025. How did the national debt reach $34 trillion? The national debt surpassed $34 trillion several years earlier than pre-pandemic estimates. January 2020 estimates from the Congressional Budget Office projected that gross federal debt would exceed $34 trillion in fiscal year 2029. But debt rose faster than expected due to a multi-year pandemic that started in 2020 and shut down much of the U.S. economy. The government borrowed heavily under then-President Donald Trump and current President Joe Biden to stabilize the economy and support the recovery. But the recovery came with rising inflation, which raised interest rates and made it more expensive for the government to service its debt. So far, Washington has been spending money as if we had unlimited resources, said Sung Won Sohn, an economics professor at Loyola Marymount University. But ultimately there is no free lunch, he said. And I think it's pretty bad. Gross debt includes money government owes itself. Therefore, most policymakers base their assessment of government's financial health on total debt held by public. This lower figure, $26.9 trillion, is roughly equal in size to the gross domestic product of the United States. Last June, the Congressional Budget Office predicted in its 30-year outlook that public debt would equal 181 of American economic activity by 2053. What is the impact on the economy? The national debt does not appear to be a weight on the U.S. economy right now, as investors are willing to lend the federal government. This lending allows the government to continue spending on programs without having to raise taxes. But path of debt in coming decades could put at risk national security and major programs, including Social Security and Medicare, that have become most prominent drivers of projected government spending over next few decades. Government dysfunction could also be a financial risk, as could another debt limit showdown. If investors worry about lawmakers' willingness to repay U.S. debt, foreign buyers of U.S. debt have already reduced their holdings of Treasury bills. An analysis by Peterson Foundation notes that stock of foreign debt in United States reached 49% in 2011, but fell to 30% by end of 2022. Looking ahead, debt will continue to rise rapidly as Treasury expects to borrow nearly $1 trillion more by the end of March, said Michael Pei,